Potentially one of the most popular dividend stocks of all time, the Coca-Cola Company has been increasing their dividend payouts for 60 consecutive years. If we zoom out and look at this, we can see Seeking Alpha started tracking it in 1989. They were paying out 2 cents per share every quarter, and jump forward to now, it is now 46 cents per share every single quarter. It's also a company that makes up a large portion of Warren Buffett's portfolio. He invested in this company decades ago, and it currently makes up almost 7% of his entire portfolio. So in this video, we need to figure out, is Coca-Cola trading at a good price, and is it worth considering adding it to our portfolio? Now, we have a lot to dig into in today's video. Obviously, we want to jump into my valuation spreadsheet, but I also want to dig into their investors report just a little bit. So let's go ahead and dig into it. Now we can see over the past year, they're down around 5%, and year to date, down around 6.46%. So not a very good year in 2023 for the company so far when it comes to share price returns. Now, if we come over here, we can see the company has a pretty decent starting dividend yield, sitting at 3.1%. Now, like we've already touched on just a little bit, the company does have a phenomenal history of increasing their dividend payouts. They've done so for 60 consecutive years. But how fast is that dividend currently growing? Well, before we look at that, first let's look at the historical dividend yield. We can see our 4-year average dividend yield for Coca-Cola sitting a little above 3% at 3.02%. So the forward-looking dividend yield of 3.1% is a little bit higher than that 4-year average, which is something that I do like to see personally. If we look at these dividend growth rates, you can see the 10-year sitting okay at 5.34%, but the 5-year and 3-year dividend growth rates both sitting at around 3.5%. I personally like to see dividend growth rates a little bit higher than that when I invest into dividend stocks. Now, when we look at these 3-year and 5-year dividend growth rates, again, we do need to look at them in the context of a company that has been increasing dividends for around 60 consecutive years. So typically when that happens, you will start to see lower dividend growth rates, but are those dividend payments stable? Well, if we look at the dividend safety of the company and scroll down, we can see that cash flow payout ratio sitting right at 67.61% for the forward-looking cash flow payout ratio. The trailing 12 months sitting at around 70.44%. And this is something I want to come back and talk about a little bit later in the video, but for now, we're going to keep moving forward. And we're going to go ahead and jump over to the investor presentation. Now, there's a lot of great insights that I found as I was going through this, but I want to point out just a few of the most important ones. And the first one I want to point out is free cash flow. For the last 5 years, this company has averaged 14% free cash flow growth, going from around $5.3 billion in 2017 all the way up to $9.5 billion in 2022. That 14% free cash flow growth, I believe, is far higher than most analysts were expecting over this time period. Now, if you aren't familiar with free cash flow, why is it so important? Well, it's actually one of the most important metrics to look at in my opinion, and this is actually something that I talked about on my Twitter account the other day. The one thing I absolutely have to see to invest in a company is growing free cash flow, and there's 5 different things that a company can do with their free cash flow. The first, and probably the most popular, is reinvest for organic growth. This is something you're going to want to see from every single company. The second is pay down debt. The third is acquisitions and takeovers. The fourth is pay out dividends, and the fifth is buy back shares. And fortunately for us, Coca-Cola talks quite a bit about what they want to do with their free cash flow in their investors presentation. So if we jump over to the 31st slide, and we can see Coca-Cola's 2023 capital allocation plan. Part of the plan is investing back for growth, but also part of the plan is returning to shareholders. We can see they are looking to reinvest back into the business. The outlook is around 1.9 billion CapEx, which stands for capital expenditures, but they're also looking for consumer-centric mergers and acquisitions to further the company's growth. Now, if we look at the return to shareholders, we can see they're hoping for 5% dividend growth. And like we just saw, that is a bit higher than we've seen over the past couple of years from the company. But if we jump back over to the investors overview, we can also see they are looking to repurchase some shares to offset any dilution that the company has. Now, if we jump over to the 24th slide, we're going to see a 5-year cumulative total shareholder return. And we're looking at a couple of different things. The red line is Coca-Cola, and this dotted line right here is going to be the S&P 500 index. Now, it doesn't show 2023, and Coca-Cola has dipped down quite a bit in 2023, while the S&P has jumped up. So the S&P 500 definitely doing better than Coca-Cola over the past year, but this chart does point out something that I want to talk about. Coca-Cola is a company with very low levels of volatility. It does very well during periods of economic downturns. So for example, if we jump over to my stock valuation spreadsheet and plug in KO and hit enter, One of the things that I want to show you right here is the beta is sitting at 0.55. That means the company is going to see very low levels of volatility. So if you're someone who's looking for steady and reliable and growing dividends, Coca-Cola can be a really attractive option due to that very low volatility level. Now, the last slide that I wanted to look at in the investors presentation was talking about margins and looking for opportunities to drive margins. Now, if we jump back over to Seeking Alpha, if we scroll up and click on profitability, one of the things that you'll notice is if you look right here, Coca-Cola's 5-year average for their gross profit margin sitting at around 60.24%. Now the current is sitting at 58.52%, so not a huge difference from the 5-year, but overall I think that's actually somewhat decent margins. Now if we jump over to the company's income statement, one of the things that you'll see is they are starting to have somewhat slowing revenue growth. This means for the company to increase their bottom line, they are going to have to find a way to get better margins, which is one of the reasons I think the company is starting to focus on its pricing power. Now with all of this being said, let's go ahead and jump over to my stock valuation spreadsheet to see if we can find the fair value of Coca-Cola. And like always, we'll be looking at a few different valuation models. If you'd like to be able to download this spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. Now you already saw me plug in KO, so all this data has loaded in, but their dividend payout at the moment is $1.84, giving them a starting dividend yield sitting at around 3.12%. Now the cash flow payout ratio was sitting at around 70% as we saw earlier. That's actually a little higher than I typically like to see it, but for a company like Coca-Cola, that's honestly probably right where they want to see it at. They want to provide a lot of returns in the form of dividends, but they also have some capital left over to reinvest back into the business. Now analysts currently have a target price of almost $70 per share for this company, quite a bit higher than that current trading price. Institutional ownership sitting at around 71.5, and like we already pointed out, a beta of just 0.55, so you should see very low levels of volatility with this company. Now, typically one of the valuations that I like to look at is Graham's valuation, but I really feel like this is not a fair valuation for Coca-Cola at all for a few different reasons that I don't have time to touch on in today's video, but I'll probably talk about it in the future. Now, the next one that I want to look at is the discounted cash flow analysis. Basically, what we're doing is we're valuing a company based on how much free cash flow they're going to produce in the future. So we need to project a growth rate for the future free cash flow. So what I've done is I plugged in the company's historical free cash flow so we can see those year-over-year free cash flow growth rates. I'm projecting a growth rate of around 6.5% for the company moving forward. So based off that growth rate, we can project the company's future free cash flow and the terminal value, which is the sum of the future free cash flow past the year 2030. We then find the present value of those future free cash flows and add them together, add the company's cash and cash equivalents, subtract out the total debt to get the equity value. Once we have that, we divide by shares outstanding and we come to a discounted cash flow price per share of $46.04. Now the next valuation that we'll look at is the multiples valuation, and there's not a lot of great comparables for Coca-Cola, but there are two that I think are good enough. We take their stock price, divide by the earnings per share to get the price to earnings multiple, take that average price to earnings, multiply by Coca-Cola's earnings per share, and we come to a fair value of around $87 per share. Now the last valuation model is the dividend discount model, and this values a company based on how much they pay out in dividends and how much that dividend is increasing year over year. So I plugged in the company's quarterly dividend payout so we can see how much they pay out each year. This allows us to see our year over year dividend growth rates of 2.5, 2.4, 4.76, and 4.55. So the last couple of dividend increases have been a little bit higher than the previous ones, but that's an average growth rate of around 3.56%. So moving forward, I'm projecting a dividend growth rate of 3.75%, discount rate of 8%, and that gives us a dividend discount model price per share of around $45. So if we jump over to the output tab, we can see the three valuations that we use. The multiples at 86.92, discounted cash flow at 46.04, and dividend discount model at $44.92. That gives us an intrinsic value of $59.30, which is extremely close to the current trading price. So with a 10% margin of safety, you could see our acceptable buy price sitting at around $53.37, and with a 20% margin of safety, acceptable buy price sitting at around $47.44. Now, complete transparency, as always, this is actually a company I own in my personal dividend portfolio, but I haven't added shares in quite some time. You can actually see I'm up around 25.65% on this position as I bought it in when it's trading around $48 per share. Now, something that is extremely important to understand about Coca-Cola is this is undoubtedly a company that trades at a premium. It's very rare that you'll see the intrinsic value drop really far below that company's current trading price, and part of that is because investors are very confident that this company will be able to handle any economic downturns. There's no doubt that Coca-Cola's rapid growth days are far behind them, and from now on we will probably see slower growth rates, but to some people, the idea of a company that has steady growing free cash flow, steady growing dividends, even though the company isn't growing at a rate as fast as the S&P 500, that can still be an attractive investment opportunity if you're in the right stage of life. For me, I personally don't plan on adding any more Coca-Cola to my portfolio at its current prices, but I do think if it dropped quite a bit, I would reconsider. But there you go, there is a quick analysis on the Coca-Cola company. Go ahead and let me know your thoughts in the comments down below. If you'd like to be able to download this spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.